Well, good afternoon and welcome to the Capital Group's YouTube channel. I'm Kevin Fitzpatrick, a partner here at the Capital Group and CEO of the Government Technology Insurance Company. Thanks for joining us today for part 2 of the Payroll Protection Program Flexibility Act loan forgiveness. As if almost on cue, about one day after our last webinar on the PPPFA, the federal government released additional important guidance on loan forgiveness. Today, we're going to spend about an hour together in an interactive session discussing the updated guidance, strategic tips on PPP loan forgiveness, and how you can properly apply them to help ensure that your loan becomes forgivable. Throughout today's webinar, I will be fielding your questions and then pushing them back out to our panel of experts for discussion. Please go ahead and use the YouTube chat feature to submit the questions. We're going to try, I promise, to get to everyone's questions. But if we run a little short on time, we'll reach out to you directly to try and help you out with an answer. We're also going to record this webinar and send it out to everyone in attendance. Today, we're joined by Andrew Beardall, in-house general counsel at the Capital Group and chief operating officer of the Government Technology Insurance Company. Andrew is a graduate of the law school here in DC at Catholic University and holds a graduate degree in neuroscience. Dan Wahlberg is a CPA and a partner with Hertzbach & Company. Hertzbach is a longtime Capital Group partner in a large regional CPA firm headquartered in Owings Mills, Maryland. Dan's been with the firm for 22 years and is the director of Hertzbach's Government Contracting Services Group. Mike Stankis is a certified public accountant and a partner at Hertzbach. Mike's been with the firm for over 16 years and is the leading member of Hertzbach's GovCon practice. Both Dan and Mike represent government contractors before the DCAA. They assist with FAR compliance issues, incurred cost submission preparation, and rate calculations for businesses in the GovCon world. So without further delay, I'm going to turn it over to Andrew to take us through a very brief recap of what got us to this point, and then we're going to move right into the updated guidance and the conversation. So Andrew, go ahead, please take it away.
All right. Thank you so much, Kevin. Good afternoon, everybody, and welcome to part 2 of our PPP forgiveness seminar here. Now, I'm just going to give a brief recap of what the PPP was. And as most of you know this, I'm going to go through it very quickly. But the PPP, Payroll Protection Plan, was part of the CARES Act, which was signed into law by the president back in March, which allows for forgivable loans. The intent of it was to keep people on the payroll, even if they weren't working, as opposed to having people lose their jobs, potentially lose their health insurance, go on unemployment. The goal was to keep them within the company. And it would provide continuity, income security, and just a sense of order in otherwise chaotic times. Now, the rules on it were you had to have been operating as a company as of the 15th of February, 2020. You have to have 500 or fewer employees, even though there are specialized rules for the hospitality industry, and a lot of the normal provisions for getting an SBA loan were waived. Now, how could you spend this money so it would be forgiven? You could spend it on payroll costs. That's actual gross payroll that you pay your employees. You could spend it on employee benefits, their health insurance and the like. You could spend it on retirement contributions that the company makes on behalf of the employees. All of these things designed to specifically help out the employees in these situations. Finally, you could spend it on rent, mortgage interest, or utilities. Those are things to support the business during what's going on. And originally, you had 8 weeks to spend it. Now that's changed, and I'm going to let my friends from Hertzbach go into more detail on that. But the categories have not. And those are the areas where you can spend this money. Once it's spent, you'll go to your bank and you're going to submit a request for forgiveness. And assuming that you follow the rules, that you only spend it on what you're supposed to, that you haven't fired a bunch of people and that you haven't reduced your payroll, you're going to be able to get that loan forgiven. You won't owe any money on that loan at all. So it is a wonderful gift from the government, again, if you follow the rules. Real quick, payroll costs, that's your gross payroll, that's your employee benefits. It can be contributions to 401ks, HSAs, and the like. Utilities, what does that mean? Utilities, I'm sorry, there's rent, mortgage interest, and utilities. Utilities can be gas, electric, transportation, water, sewage, phone, internet. It does not include technology services right now, like Office 365 or anything along that line, but just sort of base utilities, the things you think of to keep you going on day by day by day. So what I'm going to do is I'm going to pass this over to my friend Mike, and he's going to take it from here. He's going to tell you a lot of the changes that are now kicking in here. Mike?
Thanks, Andrew. Yeah, we gave a seminar on the Paycheck Protection Program not that long ago, and we made a joke that everything was going to change the next day, and it did. We now have the Paycheck Protection Program Flexibility Act of 2020. So we're going to go through this. My colleague Dan will go through a little bit more after I do, but I'm going to start giving you a little bit of background on the act and exactly what changed with that. So Paycheck Protection Program Flexibility Act, PPPFA, was signed on June 5th, 2020 and created a number of new changes, some rather significant. Since June 5th, there's already been 3 interim final rules that have been issued with additional guidance. One of them just came out 2 days ago. We started this slide deck 2 days ago. We only had through interim final rule 17. We're now on 19. So they keep changing and will continue to change. Another important thing that came with the PPPFA and was just released 2 days ago as well was a new loan forgiveness application. Some of the changes that were made here ruled the old application ineffective since so much changed. So we'll talk about that in a minute. And then in light of what I just said, we've got our disclaimer that all of this is based on current information and may change. So first, let's talk a little bit about the application. What changed with the application? Well, a lot changed. First, they actually came out with a second version. So there's the long form of the application, and then there's an EZ form. If you look at a copy of the EZ form online, there's a lot of instructions and detail that goes with it. So we'll see how easy it is, but you do have to fall under one of the 3 criteria listed on our slide in order to use the EZ form. So if you're self-employed, that's one reason. The next would be if you don't fall under any of the reductions. If there's a reduction in salaries or a reduction in FTEs, which we'll talk about a little bit in a minute, if you don't hit there, you can use the EZ form. And then if you did have a headcount reduction, but it falls under there was a carve out for a health directive. If you were required to be shut down and you couldn't bring people back in, you can potentially use the EZ form. The full loan application, it's not perfect. It's out there. Some of the dates you'll see, there's an October due date that's not correct. They have said you have 10 months after the end of your covered period to apply for forgiveness. What is the advice on that? Most likely, we're going to want to apply as soon as you can. I think we're going to probably be at the mercy of the banks on that when they have their ability, whether it be an online forgiveness application or the like. What didn't change? Well, one of the major things that didn't change is the application date. It's still June 30th. So if you have not already gotten a loan, the clock is ticking. There are funds available. We don't know if this is going to get extended or not. I've read a few things that if the money is not used by June 30th, they may reappropriate and use it for something else. Other than that, a lot of the procedures in the application process we went through on our last presentation that was part of the first round of PPP has not really changed. So one item of change is the loan maturity date. So originally there was a 2-year payback for anything that was not forgiven. Now, if you've received your loan after PPPFA in June 5th, you automatically have a 5-year repayment period. They did carve out for anybody who got loans earlier than that. You're still a 2-year maturity. However, you can work with the bank and there is a possibility that they'll extend it out to 5. I don't know if the banks will be motivated one way or another, but I would think they're going to work it out here. The piece to mention, if you're looking at June 5th date, the loan is made on the date you're assigned a number by the SBA. This will be on your PPP form from the bank. It's not the date you received your funding. It's likely earlier than that. So here's the big one. The biggest change is the extension of the loan forgiveness covered period. So originally you had 8 weeks to use the funds. You could use them on payroll. You could use them on the covered expenses Andrew touched on. They extended that to 24 weeks. They did that so that more people will likely be able to use the entire amount that they were given. As everybody knows, 2.5 times of your prior year average payroll was received. 8-week period was only 2 times. So that's where the other expenses came in. A lot of companies don't have those other expenses. So 24 weeks gives everybody additional time, or December 31st of 2020 is where it ends. If you got a loan prior to June 5th, you can still use the 8-week covered period. So if you will be using up all of your funds prior to 8 weeks, you can use that period and you can apply for forgiveness. If not, and you go longer, if you got a loan after June 5th, you have no choice. It's 24 weeks regardless. Next change, the 75% requirement of compensation. This was another big one. In order to get forgiveness, the requirement was that at least 75% of the money that you received on your PPP loan is used to pay payroll. The other 25% could be used for some of the other various expenses that Andrew mentioned. That was reduced to 60%. That was reduced in response to a number of companies saying, you know, it's very difficult for us to spend all of this on payroll. And they were afraid, again, that they would have to have a significant portion of their loan that would not be forgiven. Originally, when this came out, the 60% was, it was worded as if it was a cliff. If you did not use 60% of the money you received on payroll, you would not get forgiveness. That was clarified. Whatever money you received, 60%, whatever money you spend on payroll needs to be 60% of the total amount that you get forgiven. So that there could be an adjustment there. What didn't change, it's still the same. The application of what you can use, the payroll versus the expenses, is still the same. The original definitions that were listed in the PPP did not change as it relates to what's included in payroll costs. So here I'm going to pass it off to my partner Dan to continue walking us through some changes.
Great. Thanks so much, Mike. Thanks, Andrew. Thanks, Kevin. We love being here talking about this stuff. Government just keeps giving us more material to go through every week. So this is great. Yeah, I think, so I'm going to take over here and just talk about a couple of the safe harbor deadlines and changes to those, because I think that's the hot topic that most people want to know is, how much of this money may I not get forgiven, right? I think with every passing change that comes through Congress, they are trying to make it more flexible, more easy for everyone to be able to keep all of the money. But that being said, once again, I think I said this last time, they're trying to make a one-size-fits-all set of rules for everyone. And I think they're finding it more and more difficult as more and more questions come up. So there will be more clarifications on all of this stuff after we're done. And we fully expect plenty of people to be confused by a lot of this. And we're obviously here to help. So we think this is a great opportunity for Q&A. So I'm going to go through, there's not that much here. I like Kevin said, have those questions ready, send it through the chat feature on YouTube, and we'll go through each of those questions as best we can. The extension of the safe harbor deadlines, these are the two biggies. The FTE reduction, as we talked about last time, and the salary reduction. So if you remember from last time, the FTE reduction safe harbor was if you were to reduce the number of bodies you had employed at your business between February 15th and April 26th, you have a safe harbor, a time by which you can rehire them and not get penalized on your forgiveness application. That original deadline was June 30th. That has gotten pushed out to December 31st. And we'll talk about a couple additional exemptions from that, but they want to give you more time to be able to rehire your folks. So make sure you understand that, and we'll talk about the interplay between an week period and a 24-week period. And I think one of the things Mike talked about was the big stretching of the forgiveness period of 24 weeks. There are a couple of questions out there. Can I use it over 10 weeks, 12 weeks, 16 weeks? Right now, as we read it, and this may be further clarified, it really looks like you either have an 8-week period or a 24-week covered period. So keep that in mind. So the deadlines for reductions got pushed out to from June 30th to December 31st. Same thing with the salary. If you recall from last time, salaries that dip below 75% of the original salaries, that needs to be corrected prior to this safe harbor deadline, which is now December 31st. You just have to get up above 75%. Obviously, we'd love to have everyone get back to their original salaries. A couple questions here. Do borrowers claiming safe harbor have to wait until December 31st to apply for forgiveness? That's unclear, but also that goes back to, are we taking our 8-week period or are we taking our 24-week period? So covered period. So in theory, you don't have to wait until December 31st to apply. Let's just take each one in its simplest form. So the 8-week period, let's say the money was received from the loan in the middle of April. You have 8 weeks. You would be done by the middle of June, in theory, if that was the covered period that you chose. You would be able to apply for forgiveness once you determined that you've gotten your employees back up to the FTE count. So if you did not get them back up, you could apply, we believe, but you may still get your forgiveness reduced. And on a 24-week period, in theory, let's say you got that same money in April, your 24-week period would then be over, let's say, in mid-October, and you could apply, assuming that you got your FTEs back up by then, you could apply and still capture the safe harbor. So clear as mud, I got it, but you don't necessarily have to wait until December, but we're not perfectly sure, okay, about that one. We probably will wait for more guidance. Another question that often comes up are if borrowers have reductions outside that window, that February 15th to April 26th time period, are there any other safe harbors? And there are a couple of new ones, so let's talk about that. Let's go to the next slide here. In theory, if you have if you try to rehire and you couldn't get them back, you're able to not have an FTE reduction. So that all has to be documented. You tried to rehire, you've made offers, all that good stuff. If you are not able to rehire, you still have an exemption from that FTE reduction, even if you don't get your employees back by December 31st or the time in which you apply. So that's a little hazy there. We just want to make sure we get a little more clarification on that one. And the second one is where you have you're not able to get your business back up and running. And that's, based on guidance by the CDC, OSHA, Secretary of Health and Human Services. If they're saying that you cannot operate at a level the same as you previously operated, there is an exemption for the FTE reduction. So keep in mind, if you are not able to do that, that is out there for you to try to document and then ask for the full forgiveness. The deadline for forgiveness is also an interesting topic. They've changed this to be 10 months after the loan forgiveness covered period. So that could run well into 2021. If you choose a 24-week period, and then you have 10 additional weeks. You're looking at possibly August of 2021 for that deadline. So the deadline could, if you choose a covered week of 8 weeks, and I'm not sure if you haven't actually applied, how do they know which covered period you're actually applying for? But I guess it'll be impacted by your application. You have 10 months from that date. So keep that in mind, 10 months. It's very interesting. If you look at the new application that was just released, as Mike described it the other day, it still says October 31st at the top of it. So we still expect that application to be adjusted further. And another wrinkle on that one is pretty interesting. For those borrowers who have gotten their money prior to June 5th, they would have the option to extend that for 24 weeks, and then 10 months after that. It's very possible that if you only have a 2-year loan and have not renegotiated that with the bank to be 5 years, which, as they've described in the guidance, has to be mutually agreed upon by the bank and the company receiving the loan. If you still have a 2-year loan, you could be pushing pretty close up to that deadline before you even have to repay, and you have only 6 or 8 months left to do that. Let's see, the next topic. Right, the deferral period. So the deferral of payments used to be 6 months. Now the deferral period is determined by the amount when you've got forgiveness. If you've applied for forgiveness and you have been told that it's either partially forgiven or not forgiven, you are allowed to defer payments until that date in which you have been
working fucking 2 seconds ago.
So in addition to that, let's see here, borrowers need to apply for forgiveness. Oh, right. So if you do not apply for forgiveness within the deadline, you have to start making payments. So it's after that 10 months subsequent to your covered period. And then lastly, on slide 21, we've got an additional help for those who are receiving the loan forgiveness. The PPP loan forgiveness applicants are now allowed to receive the same employer payroll tax deferral that others under the CARES Act were. So if you wanted to also defer your payroll taxes, and I know we don't cover any of that topic on this webinar, you're now allowed to do that even if you got PPP loan forgiveness as well. So keep that in mind. I think I went through that fairly quickly. But there's plenty of questions, I'm sure, out there. Kevin, go turn it back over to you, and you can let us know what questions you have out there.
Dan, thanks a bunch. Really appreciate it. We have a handful of questions in already, and we also had some folks who had emailed in questions prior to the start of the webinar that I'm going to send out to the team here. I think the first one here is going to be for Andrew. Can I apply for another loan since the rule is now 24 weeks?
All right, terrific question. I can certainly see why you'd want to, because free buckets of government money are very appealing. But the answer is no, you cannot. The loan application amounts are the same. You're still basing it off of what is in essence 2.5 months of your payroll. It's not allowing you to go back and base it off of 24 months worth of payroll. And you as a company are only allowed to get a single loan during this time. So no, you cannot go and get a series of 3 8-week payrolls as opposed to one 24-week one.
Terrific. Thanks, Andrew. And in a follow-up to that, do we have to use the 75% rule? In other words, can we spend 100% of payroll towards that?
Yeah, absolutely. I mean, the goal of this program was to keep people's paychecks flowing. And the original 75% rule and the now modified 60% rule says you have to spend at least that amount on payroll. But if you pay more for payroll, that's a terrific thing. That goes along with the spirit of what the law was intended for. And if anything, having everything together in one line item when it comes to forgiveness will just make it easier on the paperwork then. So yes, you could spend 100% of it on payroll.
Terrific. Thank you, guys. And this is a question, and this is going to be a question, I believe, from Mike. This is in from Jessica. What cost can I be forgiven from the payroll portion once my employees reach the $15,000 threshold? You know, can I continue to calculate their employer taxes for forgiveness after that?
No, well, during the period, that's a good question. So one more time on that one, Kevin.
Sure.
If you've hit the $15,000 of payroll, and then you're saying after that, if you still are incurring employee costs, health insurance, 401k, that stuff.
The question specifically was around employer taxes. Can I continue to calculate their taxes for forgiveness after that 15K threshold?
I'm not sure on that one because the employer taxes are not included in there. Okay. You know, your unemployment taxes, which I think is going to be a smaller amount. Andrew, I think you had addressed that a little bit. Do you have something on that one? I don't.
Sure. Yeah. Give it just a second here. And yeah, absolutely. As far as employee taxes go, right, part of what is not covered is any payments that the company is making for its portion of Social Security and FICA. So those things cannot be forgiven and should not be included in any of your calculations. Now, once you have hit that 15,000 and change limit per employee, what you are allowed to stack on top of that are 401k contributions and any payments that are made for benefits out there.
Thanks, Andrew. Yeah. Thanks, Mike. And in follow-up to that, Andrew, this is also from Jessica. If employees have voluntarily resigned or quit through the period of the loan through no fault of our own, the company's fault, and their salary stayed the same, job stayed the same, do we still get dinged for that in our head count?
Well, that goes down to some of the FTE analysis that Dan was talking about.
Yeah,
but
if you want.
Yeah, actually, so let's pass this off to Dan because he's a little bit more adept at FTE analysis and safe harbor. Dan?
Yeah. So yeah, absolutely. So the if someone voluntarily leaves, as long as it's documented, that should not hurt you on the FTEs. Additionally, if you have employees that did get terminated, that you wanted to rehire, and they say, no thanks, I'm not coming back, that also does not hurt you on the FTE calc.
Terrific. Thanks, Dan. Hey, Dan, maybe we'll stay with you for a minute here. What happens if the rules change again after I've submitted my loan forgiveness application?
So it's not, that's a great question. Since everything's changing and every week we have something new, and it seems like most companies would like to find out as soon as possible if their loan will be forgiven. So it's very possible you could make an application for some amount that's less than full forgiveness, or you could apply for full forgiveness and you do not receive full forgiveness based on what's submitted in your account on your application. So there is no reason to believe that you are not able to amend that application We have not gotten crystal clear guidance on that, but we believe that you probably will be able to do that. And with the only one exception would be probably if you don't have it applied for prior to the final deadline. So I would make sure if you're going to amend it, you would submit that prior to the final deadline, 10 months.
Terrific. Thanks, Dan. This next question is going to be for Andrew. Andrew, can you get PPP loan forgiveness for employees who are out on FFCRA leave or extended FMLA?
All right. Dan touched on this earlier. We didn't cover the FFCRA, but what the FFCRA allowed for was 10 days of paid family leave and expanded the definition of FMLA. And it allowed both of those to be offset by taking away payroll taxes. So if a company spent $1,000 on this paid leave, they could pay $1,000 less in payroll taxes. As there is already an offset available through the FFCRA, and the company is already going to be revenue neutral for that because they are taking that credit against their payroll taxes, the answer is no, it is not also forgivable under the CARES Act because the government doesn't want you to double dip. They'll only give you free money in one occasion, not both.
Thanks, Andrew. A lot of our clients here have subcontractors, and some of those subcontractors are very small. Oftentimes they're 1 or 2 man bands. And maybe I'll put this question over to Mike. How do the self-employed or 1099ers document their PPP spending?
Yeah, it's actually going to be very similar to how they when they applied for their PPP loan. The main document is going to be their Schedule C. So if they're a single member LLC getting a 1099, they're going to be reporting their income and expenses on Schedule C on their 1040, their personal tax return. So whatever their profit that they're showing on their Schedule C, that's the application purposes, they got 2.5 times. And assuming that they're using their 2019 Schedule C for forgiveness, which they should be at this point, if they elect a 24-week period, and there was actually, I want to say this information just came out within the last day or two as well on self-employed. If they elect to use that 24-week period, they get 2.5 times. So getting the 2.5 times essentially guarantees for the self-employed that they're getting their entire amount repaid. Now, if they choose the 8-week period, which I wouldn't think that they would want to, they would be slightly limited in the amount that they can get solely based on pay.
Awesome. Thanks, Mike. We got a series of questions in prior to the webinar, actually quite a few, regarding the deductibility of profit sharing, of 401k contributions. And I got a series of questions here. Maybe I'm going to send these over to Dan. Dan, how does a company handle a one-time contribution to a 401k under a safe harbor plan as it relates to loan forgiveness, of course?
Sure. We've gotten a lot of questions on that. So a lot of companies have the ability to have a profit sharing contribution in 19, and they weren't planning on making that contribution until later in 20. The tax code generally allows you to make that contribution until the extended due date of the return. So it's unclear, more guidance. How many times have we said more guidance is needed? But it's unclear right now whether or not that is going to be okay. We believe that whatever you would do to be conservative would be is if you took 2.5 month portion of that, potentially you would be able to get it. But just to be conservative, and I would probably say it's not likely that you could take that contribution. But again, if you have an extended period here to 24 weeks, you may not need that to get full forgiveness. So if you're able to use the 24-week period, you're able to use your payroll for a much more extended time and eat up all of those funds, and therefore you may not even have to use that as one of those items.
Terrific. Thanks, Dan. Along those same lines, a business owner, he or she now finds themselves awash in PPP funds, feeling generous. Can they increase contributions to the 401k, or for that matter, to an HSA account, and also make those increased contributions forgivable?
Yeah, well, it was pretty clear from the original guidance that the government wanted everyone to stay on the same footing that they were. They wanted to make sure everyone got what they were getting. So increases in contributions on their behalf, we don't believe that that is something that will be allowed for in the forgiveness. So, continuing people's salary, this is meant for really those companies that don't want to hurt their employees and not necessarily to add to them and then get the forgiveness on that money.
Terrific. Thanks, Dan. And kind of along those same lines, I'll grill you one more time here. If a company has not yet made their 2019 profit sharing contribution, and if they make that during the 8-week or the 24-week period, is that amount forgivable in the calculation?
Yeah, I think that's similar to what we said before. I would just say very unlikely that that's going to work, although we have no specific guidance that says that you can't. So if you did want to cut that down into 2.5 months as opposed to the whole year, it's possible you could do that. If it was already anticipated and calculated, it's possible. But again, there's no definitive guidance one way or the other on that, and I would probably shy away from it. Again, if you have 24 weeks to use the money for forgiveness, I think that's the goal that Congress was probably trying to attack here with the 24-week period, is to eliminate some of these cutoff issues and other things. So they really wanted to allow for the payroll. So if you can pay your payroll over 24 weeks and take the extended period, then this limitation may not really come into play, and you don't have to use it for those monies.
Terrific. Thanks, Dan. I think this next question is going to be for Andrew. Andrew, do we have any updated specific guidance on what constitutes payroll costs since the previous webinar? Disability insurance, life insurance, health spending account spends, all those contributions made by an employer, including things like, say, auto allowances.
Sure. Transportation is considered a utility. The exact specifics of how it's going to be defined, we don't have any guidance on. So if you give somebody a transportation allowance, if you give away Metro cards, we just don't know the answer to that. As for other employee costs, other things are considered payroll costs, if you will. We do know that employee benefits are included. So that is health insurance, STD, LTD, things that directly benefit that employee. Until there's such guidance that specifically says, dental is or isn't included, vision is or isn't included, we're taking that to mean all employee benefits. Anything from which an employee derives a direct benefit from it would be included as part of an employee benefits program.
Thanks, Andrew. That's a good analysis. We have one more final question here from Mike. Then maybe we can open it up to the panel for a quick closing discussion there, and we'll take any last minute questions. Mike, has the cap of 15,385 persons gone up under the new guidelines?
The cap hasn't gone up. So if you're using an 8-week period, it's still capped at the $15,000. However, if you do elect a 24-week period, essentially you're tripling the timeline that you have to spend the money. So that 15,000 turns into 46,000 roughly. So it gives you the longer runway. Honestly, I don't think many people are going to hit the $46,000 cap. If you're electing to use 24 weeks, I think we're going to see a lot of people, since you're only getting 2.5 times your average prior year payroll here. I think a lot of people are going to burn through this thing in a lot less than 24 weeks. Assuming that they're, they're not closed for an extended period. So cap is still there if you're choosing the 8-week period, and the cap essentially triples if you're choosing the 24-week period, and that's for employees.
Can I just add to that? That's an excellent point, Mike. The cap for owner operators, that is max. That's not up to the full 45. So if you're an owner, you are maxed at 2.5 months.
Or 20,000, 21,000.
Yeah.
Terrific. Well, we ran through our questions here today. We chopped a lot of wood. Maybe we can spend a moment or two and open up to our panel of experts here, see if they have any closing remarks and or strategic tips on the way out. And we'll wrap up and let everyone get back to their afternoon.
Sure. Kevin, I'll jump in first on that. Sorry, we'll give this thing a moment to catch up here. All right. One thing I'd like to say is just one of the most important aspects of forgiveness is going to be the clarity of your presentation on it. You're going to want to make sure that every dollar that you are asking for forgiveness for, you've got a piece of paper that supports it. Now, some of those pieces of paper are going to be like your 941s, your 940s, your payroll reports. But you could also keep your rent invoices, keep your utility bills, keep your mortgage bills. Now, have everything nice and organized when you do eventually submit it to your bank for forgiveness, because the better organized it is, the better that they can match each charge to a piece of paper that is an allowable, forgivable event there, the smoother it will go for you and the less likely a chance of any type of adverse decision against you. And I'm gonna pass it here to Mike. I think he had a couple of thoughts to share as well.
Yeah, I just wanted to share one. I actually gotten this question twice in the last 2 days, and they both came from LLCs and owners' compensation. There was some confusion when a lot of people filled out their original loan applications, and for those people who have not yet filled out their loan applications, it's been clarified as to whether they were allowed to use guaranteed payments paid to an LLC member in the initial loan. That has been clarified that yes, you can. It's one of the few times you can potentially change your loan amount. So if you have applied, and even if you've received funding, there's a possibility that an adjustment can still be made. If your loan amount would go up, were you to include the owner's compensation in there, you can reach out to the bank, and there is a possibility that they can update through the SBA, the electronic E-Trans system, an increased loan amount. There is a time limit on it once they submit their first Form 1502. I don't know the timeline on when the banks are submitting those, but once that happens, it locks in the loan. So you can have, it's possible you were distributed your funds and you can still have that included in your application if you catch it quick enough.
So Mike, let me ask you a question on that. If you were using guaranteed payments, is that still limited by the 15,385 number?
Yes. Yep, still capped. Actually, I want to say, is it 15,385 or 20? It might fall under the $20,000 limit, but you're right. It's going to be similar treatment to the employees on that one.
So you couldn't have a situation where somebody is getting both a salary, a paycheck, and a guaranteed payment on the side. And
they shouldn't. They shouldn't. Typically, for an LLC, members of LLCs are supposed to be paid their compensation through guaranteed payments, not through a W-2. So you shouldn't have any duplication there. You may have an LLC that elects to file taxes as an S corporation, in which instance the owners would be paid on a W-2, not a guaranteed payment. So it shouldn't duplicate.
Good. Thank you.
Thank you, Mike. Hey, a couple more questions have come in. So since we have a few more minutes and we have the experts at hand, we're going to keep going. Andrew, over to you with this one. Would FTE exemption apply to businesses not necessarily restricted by ongoing CDC or local regulations, rather their industry has simply not sufficiently recovered to justify full restoration of prior FTE status?
Okay, well, as an FTE question, I'm going to throw that back over to Dan
Good
because
point.
he's the expert in that regard. So, Dan, if you wouldn't mind taking this one.
Sure, absolutely. So that's pretty specific. So the exemption is for those industries that are specifically restricted to keeping their doors shut, not necessarily just economically that it's been challenging and you can't do it. So that exemption is not there. But however, the exemption is there if you can recover and get those people back and employed by December 31st. So that has been stretched to allow for a longer recovery period and allow for those companies to rehire over a much longer period. So sorry, no, but you got some time to try to get your people back.
Thanks, Dan. Along those same lines, Dan, we'll stay with you. And this is a question in from Robert. If a business cannot return to a previous level of business, is there a penalty if an individual employee has reduced compensation by a specific percentage compared to February 15th, 2020 compensation?
Yeah, so that goes back to the safe harbor exemption. They do give you a bit of a cushion there, right? It's 25%. So if an employee's salary is down up to 25%, you are not penalized. But if beyond that, you do have ratable adjustment for that, and it's on an employee by employee basis. So the answer is sort of yes.
I think it's also important just to add quickly to it.
If you get it above 75%.
Yeah, and there are several anti-duplication, I'll call them, in there so that you don't get hit for a reduction in salary and also get hit for a reduction in FTE as well.
That's correct.
Terrific. Hey, Mike, along those lines, Ian has a question. If you meet the requirements for one of the safe harbors and apply for forgiveness, is there any mandate to maintain FTE and salary levels all the way through the end of 12/31/2020?
Yeah, I mean, I'm going to kick that one to Dan again, just again, because it falls under the safe harbor section of his slides, but I can chime in as well. But go ahead, Dan, if you want to hit it first.
Sure. So that's a great question. And that was one of those things that there seems like there could be some loophole there, which would not be beneficial to the employees. So there is no reason to, or no specific guidance that says you can't rehire and then after you get to submit your application, and I am not suggesting anyone does this, that you can let people go. So, the goal of the whole program is to get people rehired and get them back to their salary levels. So I don't think there is anything to stop you from doing that, but I think it would go against the spirit of the law. And again, one thing to remember is whoever's looking at your application, you don't know exactly what they're going to be looking at, and they're going to have 20/20 hindsight when they look back. So if at the time that you applied for forgiveness, that you got your folks back and then you reduced your salary or your headcount after that, maybe it was completely innocent. You just had to. COVID came back with a vengeance and you had to. It's very possible that is not going to have any implications on your forgiveness application, but it may not look so good.
Yeah, and if there's one other possible thing to add there too, is that when you're looking, if your loan was received prior to June 5th and you have the opportunity to choose the 8-week or the 24-week period, you are going to want to look at an FTE analysis. The FTE reductions does significantly impact the amount that you're allowed to get for forgiveness. So taking a look at that, if you do think in the future there could be potential adjustments to FTEs, you may want to consider whether an 8-week period makes more sense, even if you didn't use all your funding, than a 24-week period. So I would say that's one of those planning opportunities to take and review and discuss with your advisors.
Thank you, Mike. I have a couple of questions here where I'm going to send over to Andrew. I'm going to combine these two into one. They're from Ajay and Keenan. Andrew, will PPP, like gloves, masks, thermometers, all the things that you might have in your office going forward now, thermal readers to check people's temperature when they come in, are all those going to be covered expenses? And also things like building access control, is all that included in utilities?
No. That's the long and short of it. When you're buying stuff and materials like that, as of right now, that is not considered a utility. It's not considered rent. It's not considered a payroll cost. That's simply the cost of doing business, same as if you were buying people new chairs.
Gotcha. Terrific. Well, here's a question, and I'm going to tee you guys up, and I'll defer to who wants to take this. And it's a question in from Clay. Can we hire you to submit our request for PPP loan forgiveness? This is going to be for Mike and Dan. I know Andrew's answer.
So we are absolutely assisting clients with applications. Typically, they're done as agreed upon procedures engagements or consulting engagements. We can't submit the application for you, but we can perform various calculations and analyses to help you with those applications. So you will need to sign the application, but we are definitely here to help. And to add to that, and I'm sure Mike will have comments too, as we have choices, right? There's now more choices, 8 or 24 weeks, different covered periods, all kinds of complexities here that you may get more or less forgiveness based on the choices that you make. It is really important that it's not just a mechanical exercise, that you analyze what those choices are and figure out what's best for the company to get the maximized amount of forgiveness in each situation.
Yeah, I think that goes right along with the last comment I made about analyzing the forgiveness periods. Those are things that you're going to want to do. You want to put the pencil on paper and see which way maximizes it. Whatever your potential forgiveness is most. However, with if the 8-week and 24-week period falls outside, if you do go into that 24-week period, most likely you will use those funds, and it's just a matter of when can you submit that application or how soon.
Terrific. Thanks, Mike. I'm going to stay with Dan here for a minute because this is going to be an FTE question. Is that FTE restoration a snapshot in time at 12/31, or must that be sustained thereafter?
As far as we can tell, it's a snapshot. And in addition to that, the 8-week period and the forgiveness calculation for the 8-week period, it's also a snapshot that you, at the time of forgiveness application, you were able to prove that you rehired all of the people that you had previously terminated. So there is no current information to lead us to believe that it has to be sustained for any period, but that could change. Lots of things change.
That's a good answer. Thank you. How about back to Mike for this one? Mike, can self-employed 1099 contractors get the loan forgiven by paying themselves and their monthly rent? The 60-40 split there.
If you're self-employed, if you're 1099, again, it's going to be driven off of your Schedule C. So you're going to take a look at the Schedule C profit, what's on there. It is going to be capped. You can use the rent, but you are going to be subject to the limitations. If you're using the 24-week period, you're only going to be able to use rent for a small portion of that. The excess between the $15,000 and $20,000.
Terrific. All right. Well, why don't we do this? We're at the end of our Q&A here. Dan, any closing thoughts for us before we wrap things up here under the hour?
Sure. Another hot topic that I don't think we mentioned at this point that we do continue to get questions on is the deductibility of the costs that you're spending from the forgiveness. And we have unfortunately no new news on that one, but just to reiterate to everyone that right now we don't believe that those expenses are going to be deductible. There was some debate in Congress as to whether they could be deductible, but as of now, that has not changed. And I would just say, again, it's getting more complex as we continue down this road. There's the easy application now that's out and the regular application. The regular application is 11 pages and the easy application is 9. So it's probably not all that easy. So just keep that in mind. There are some simplifications there. If you do have, a cut and dry case, you may not need any assistance, but if you need help, ask an advisor, because this is complicated and it's significant money.
No, thank you, Dan, very much. And with that said, I'd like to thank our panel of experts here today. They are going to be available for follow-up. There's a handful of questions that we apologize we're not going to be able to get to today because we're a little short on time here at the top of the hour. But I will make sure that the panelists receive all those questions and you can expect a reach out. And as always, if there's anything we can do to help you here at the Capital Group, please don't hesitate. Our legal department and compliance departments stand at the ready. But wishing everyone a really good start to the weekend coming up. Be safe, happy, and healthy. And thank you again for joining us today.
Thanks, everyone.
Thanks, Kevin.